Hey guys, welcome in this new video. I hope that all of you are doing great. In today's video, we are continuing on the trade breakdown series with an amazing trade on EURNZD. Before we start, as always, if you are not subscribed to the YouTube channel, make sure you do that so that way you don't miss any new video coming out. Alright, so as I said, today we are taking a look at a trade that I took on EURNZD about 2 days ago and that I closed earlier today. So that was an incredible trade. Here is the profit. So as you guys can see, well, that is a lot bigger than what I usually make, and you will see why when we jump on the charts, but there is a very specific reason of why that is. So as you guys saw, that trade was amazing. I ended up making 9% growth of my account on one single trade, which is crazy, because if we look at some statistics about investing in general, well, if you just, do like most people and go to the bank, invest your money in a mutual fund, well, 9%, that's basically what you can expect to make in maybe 2-3 years, and maybe even more if the markets don't give you that much. So in what most people do in few years, we just did that in one trade, right? And I'm not saying this to, brag or sound, so great or whatever, but it just goes to show you guys how important it is to actually learn the skill set. Because once you have that skill, well, you can make so much more money than, the general portfolio, basically. And at the end, after a few years or after even more than that, you will see how big it makes of a difference, because you will be able to make money from your computer or your phone to what you are doing on the markets, and it will pay off even more than just putting your money randomly on a diverse portfolio, basically. So that trade was a short-term trade. You guys saw the evolution of it if you follow me on Instagram. By the way, if you don't, well, make sure you do that. It's right here. But basically, that was not a really long-term trade. I had no long-term perspective on that trade. Maybe it will turn out to be a long-term downside, which we will see when we jump on the screen. But as of now, and when I took the trade, I made the conscious decision to actually treat that trade as a short-term trade. By the way, if you guys would like to learn more about how we trade, work with us directly, and just trade with us on a daily basis, make sure you check out the first link in the description box below, and it will bring you over to my website, which is my trading course, and there you will find all the information about number one, the course, and also how to join us. Alright, enough talking. Let's jump on my chart and we will take a look at this trade. Okay, so we are now on my chart. Let's take a look at this trade. As always, I will show you guys the overall view of the market, the entry, the stop, target, how the trade evolved, and all of those things, as I always do in the trade breakdown videos. So first of all, let's take a look at the higher time frame. Let's go on the weekly. So on the weekly, as it stands right now on EURNZD, we have two main possibilities that are forming, and we still don't know which one it will end up being, and we will probably know that by the next week or in few weeks from now. But as of now, we don't have enough information to tell which of those two patterns that I'm about to show you guys is actually forming. So what are those two patterns? Well, we have our main impulse right here on the weekly. We have a down move, and we know that eventually we will probably see another down move happening right here. Now, the only question is this down move already starting? And yes, that is possible, and it could also be making another pattern. So the first possibility that we have is that this actually is the first impulse, and all of this is actually making a correction, which means that we could see this going up like that. So that is the first possibility. The other possibility that we have is that this is, like we said, the first wave. We have this impulse, correction, impulse as the second wave, which makes also a three-wave pattern here. And then we have the breakout with the impulse, a correction, and total downside already. So those are the two main possibilities that we have, either one more up to complete a bigger pattern, or already the downside. And like I said, as of now, we don't know which of those two is actually going to happen, which is why I treated that trade as a short-term trade. If you guys remember earlier in the video, I said that that was a short-term trade, and that is exactly the reason why. Is because since we had those two possibilities on the higher time frame, well, it was really hard to make a long-term forecast because both of them are still possible, which is why I treated that trade as a short-term trade. So when we go on the lower time frame now, let's take a look at this setup right here. By the way, to make it very clear as well, one of the reason why I made that much, compared to my other trades, because if you look back at the trade breakdown videos on my YouTube channel, you will see that my winning trades are usually around 1%, 2%, 3%, 4% maybe. So it's much smaller than actually 9% on that one. So the main reason for that is because I actually took 2 trades on the same movement, on the same pair. So as you guys can see, well, right here I have the first trade here, and when it actually dropped and gave me another trade setup, I took another trade right here. So I actually had 2 trades on that same movement, which is why I ended up making a lot more than what I usually make on a single movement that I trade, basically. So now let's take a look at the trade and the entries more specifically. So basically, we knew that a downside was coming when we actually reached those levels, and the reason why is because we knew that we would at least get a short-term downside, and that short-term downside could either be a reversal pattern or a correction. So when we actually broke out of this trend right here with this impulse, we actually had some sell setups here, but we preferred waiting for a bigger pattern. So when we actually broke out of this trend right here, this is when I started looking for a sell setup, and I just needed a confirmation of one of my patterns that we trade here at Reversal Master in order to be able to get in that trade. So we got the impulse, and hereafter we got this correction. Now that correction was a little tricky, and the reason why is because this in itself could have been a complete correction, meaning this could have gone down totally right now after it. Now that was not the only possibility. The other possibility was that this was simply one wave, 2 wave, and the 3rd wave right here, which is exactly what it ended up making, and that is the trade that we took after seeing this pattern. So that was a really good trade setup. This is one of the main patterns that we trade, like I said. So basically, when we actually broke this stop right here, this is when the patterns that we were looking for was actually confirming, and we just needed a sell setup, which is what we got on the lower time frame, and that is when I actually took the trade. As you can see, the stop is above the last stop, nothing really complex on that. So if we actually had broken up and go more upside, then we had another possibility of this actually taking up for another upside, another impulse up actually right now, which is why we had to put the stop right here. So it made a very tight stop loss, which is not something that I do that often. I'd rather have a little bigger stop loss so that it gets taken out very less often, and it gives me a better win-lose ratio, basically, or a win rate ratio, call it whatever you want, but that's basically the idea behind it. But the key to understand here is that it doesn't matter what you want or where you want to place your stop, or the general idea that you have about your stop. The only thing that matters is your stop respecting the structure? Is your stop respecting the trade setup that you are having? And that is always the goal whenever that you place a stop or a target or whatever, which is why in that case the stop was very close to the entry point. Now after taking the trade, well, it just went straight down here. We got the first little impulse, we got another correction right here, another pattern, and when we broke out of that pattern, this is when I decided to take another trade, and the stop, well, was above the pattern in itself. So those were for the entries and the stop losses on that movement, which is why I took also 2 trades, because we had the first movement right here and we got the continuation right here. So I just took another sell, which was a valid sell setup here in itself, which led me to have actually 2 trades on the same movement, basically. So after that, well, as you guys can see, it just kept going down. This trade was very short in terms of the time because it went pretty aggressive, as you guys can see. We only got small patterns here in the making of that movement, but nothing bigger, no breakout even. So that was a very aggressive movement actually. And when we actually reached those fibs level and that trend and that structural point, this is when we decided to take out of the trade, which is why you see that the green box actually end here, is because that was the target that we had. And there are many reasons of why we decided to actually take out the trade right here. Like I said, we have those fibs level, we have the trend that was actually still in place before breaking out, and the most important reason is because once we broke these levels right here, I'll not go into the deep reasons of why that is, but when we actually broke those levels right here, we actually had a pattern forming right here, which means that we could have seen another upside right here, and that possibility still exists. And even if we are breaking out right now of this trend right here, it doesn't mean anything pattern wise, right? And that is really important to understand. Like I said, I'll not go too deep into that because I need to obviously keep some things for my students and for the course, but the whole idea is that when it breaks a certain point, when it breaks a certain level, it's not because of support or resistance or any of those things. It's because of the pattern. It's because of what the market is actually doing. And by understanding that, then you are able to forecast the next move, which is why we knew that when we actually broke those levels, it doesn't matter how low it goes, there is always the possibility of this reversing for one more upside. So it's always something to keep in mind whenever that you are trading. It's always to look at the patterns, and you need to know all of them, know their valid forms in order to be able to forecast the market correctly. So that was pretty much it for this trade breakdown in itself. So we saw the higher picture of the trade where we are structurally. We saw the entries, the stop, the target, and the general reasons of why those were at, well, those places basically. And we saw also how the trade evolved. So that is it, and that was the trade breakdown for the EURNZD trade. So that's pretty much it for this video, guys. Thank you so much for watching once again. I hope that it helped you and that you learned something from that. If you did, please make sure you share the video around you with other traders, because if it helped you, then it's likely going to help another person. Alright, so take care. Thank you for watching. Trade with care, manage your money well, and I will see you in my next video. Bye bye.